Good morning, ladies and gentlemen, and welcome one and all to this morning's Markets Now session. It's probably one of the earliest ones that we've done here at the UTC. I have a meeting this morning in the city that can't be avoided, so I'm going to be heading out, and so I thought I would jump on and do an early morning Friday flashback session and have a look at the European Open. Not that I'm expecting anybody at all to catch this in time for the European Open. I'm not entirely sure how many early birds we have here at the UTC, but nevertheless, you will be able to get this on catch up, and yeah, we'll take it from there. So it's good to see everybody. Hypothetically, I know you'll be online in about 45 minutes' time or so, preparing yourselves for the action of the European Open or lack thereof. Having a recap on yesterday's markets, it was a really sorry state of affairs yet again. Yeah, just a bloody sorry state of affairs. The move long that we were originally looking at from liquidity has looked really, really nice, by the way, overnight. But we dropped down into liquidity at 6:30 in the evening. So there was just no way, and there was just no way I was going to be getting involved in that one, unfortunately. Looking at where the market is, looking at where the market was and sort of assessing where it could have been, there was just no way. But the initial breakout volume itself was just completely lacking. We eventually had a little bit of a downward turn, and that was about 4:30, and that was the beginning of the move that went into the liquidity later on in the evening. But, excuse me, the initial volatility strike from these US markets was really disappointing, really disappointing yet again. But like I've been saying, look, we get these dull weeks, we do, and it's having the dull weeks in amongst the really good weeks where volume is ticking over, and we do get that kind of momentum, that momentum driver in the price action that we're always looking for. So we just have to weather the storm at the moment, team, and and look ahead to the future, ultimately, where the opportunity is going to present itself. I'm really skeptical about even trading today. The weekly gains so far for myself is sub 1%. I mean, with something like 0.4% for a net weekly gain at the moment. So yeah, not really done too much of anything really. Thinking about what we have done so far, most of the opportunities that we've taken, well, I say most of the opportunities that we've planned have predominantly done this. And yeah, just kind of cruised along sideways. The ones that have ended up triggering have done this. So we get these nice big moves. We get the big trigger, and as soon as the trade's triggered, it just goes back down and continues to range. I mean, look at this. Look at this GA, for example. This GA is just, it's ranged for 24 hours. It's not done anything, not gone anywhere. The biggest move we had was the move that triggered the trade, and then we instantly came back down again on that one. So yeah, real shame. Yeah, real shame. I said to everybody yesterday, didn't I? I was skeptical. I didn't really, didn't usually like, you know, providing a bunch of FX trading opportunities on a Thursday afternoon, simply because of how long we had left before. Well, ultimately before the market closed for the week. But yeah, let's have a look at this USD yen. So that's still awaiting its trigger. And to be fair, I would probably get rid of that one. Okay, so please do, by all means, remove the pending order for the USD yen because it's just not doing anything. It's just not. Yeah, it's not there. Looking at our gold long, this one was this morning trigger. Absolutely fantastic trade idea. There we go. That's where we are with the gold long currently. We got triggered into it a couple of times, and the market's not doing anything. This could very well end up as another GA. It really could, team. Make no mistake. I am not going to be getting out of this one early or anything, though, unless... yeah, I'm not going to be getting out of this one early unless it gets to, maybe sort of 5 o'clock this evening and we still haven't done anything. If it's still trading at around 50.32 or 50.20, for example, I'm not going to be touching that one at all, and it'll just go by the wayside. Yeah, and that's pretty much where we're at in terms of the econ. Let's have a think about next week, right? Let's get ourselves out of the funk of this week. This afternoon we do have the core PC price index monthly. I don't expect there to be too much of a volatility strike, but please do be aware that it could cause a shake-up around this afternoon at the US FX Open. I wouldn't worry too much about the US Open because obviously it's got an hour to digest the data before the bell rings for America. So don't worry too much about that, but just be aware that if you are in anything at around 1:30, there could be a bit of a shake-up. So mark that down. Now, in terms of next week, let's have a look at next week's. See what we've got going on here for a moment. Okay, so next week. So, guys, I'm just reading through to hopefully provide you with something exciting. Okay. So, next week we have PPI on Friday, monthly PPI figures on the Friday. And we have the potential for US President Trump speech, which is on the Tuesday, I believe. Is that Tuesday? No, sorry. No, I do beg your pardon. That's Wednesday, which is going to be at 2 a.m. UK time. So we're not even going to be awake for that one anyway. We've got ECB President Lagarde speaking on Thursday morning at 8:30, but she's not actually going to be talking about anything of major importance at the moment, so we can disregard that. Team, we've got nothing going on next week. We haven't got a single high impact event at all. We've got initial jobless claims on Thursday, as always, but we've got nothing of major importance in our trading hours. We do have Australian CPI and Euro CPI. The Eurozone CPI event may be slightly volatile for the European Open, but remember that the European CPI is usually released at about 10 a.m. So generally speaking, we would be out of the market by that time anyway. So yeah, yes, I would disregard that as well. I would disregard that. I don't think we've got anything. We don't have anything going on next week, team. So don't hold your breath. Is the I think is the wise thing to say about next week. Don't hold your breath. I think we could definitely see an improvement in general trading volatility. I think we could definitely see an improvement in volume and momentum. The market is currently building at many areas of liquidity on the higher time frames. We've been ranging there throughout the majority of the week so far. So I think next week we could see a fair few assets start to take off. However, things have been incredibly slow. There's no major fundamental reason for these things to be moving like we want them to move at the moment. And from an economic data release point of view, we've got nothing driving the markets. So please, let's just see how it goes. Take each day as it comes, eh? Good morning. We've got Jack Buckles in the room. Hello there, mate. Good to see you. I can't believe we've got someone who's actually joined. Yeah, good man. Good man. There you go. Jack's an early bird. So yeah, that's pretty much where we're at, guys. That's pretty much where we're at. So I think aside from all of that, we'll move on our way to the European indices. We'll get these broken down for everybody, and then I'll wish you a wonderful Friday and a good solid weekend. Oh, silver. We've got a request from Jack. Let's have a look at silver. Okay, so 50-minute time frame, doing what most of the assets are doing this week. It's heavily range bound in terms of its market state structure. In fact, I mean, it's so significantly range bound, even more so than the original sort of swings that we were getting. We have a point of interest directly above price action here. And we have a relatively sturdy margin, I would say. I would say a pretty decent margin up to around here at 83, 30? So a long opportunity anywhere between this space would be the most viable outcome. I certainly would not take it on a Friday, on a Friday, and especially at the end of the trading week that we've had. But that is the availability of it. We also have this point in liquidity down at the lows here. If we drag this back to the left, just move that down just a touch, do a little bit of fine tuning here. We've got a lot of commercial interest. Nice big spikes down into this area, followed up with big spikes in the opposite direction where commercial activity is taking place. Orders are being filled into the market. So a lot of commercial activity going on. You can still see miniature signs of this. So there's still commercial protection down there. We did have this area below the zone, but apart from that, that is predominantly the outlier, apart from this huge news event driven move that was happening back here. But all of the non-news event stuff is all sitting on top of this area. So we've got some pretty decent margins availability here. We've got the long and we've got the short. The breaker structure for the short, I would put my money on a very, very aggressive entry, which would be a breaker structure below there. We could also just improve the probability of this taking place by... that one's certainly got more respect. So if you really wanted to get involved in this one, you would take the trade. Yeah, I mean, to clear out all the noise, you would take the trade below there. But that, for me, is too conservative. Because what it means is we're not going to be able to get that stop loss. So if we take the trade about here, by the time the price action comes down, target profit down at the lows, the stop loss then, even at a 1 to 2, can be above all of the highs that we've had in recent history, which means we've got a great deal of protection there. Again, this is hypothetical, not looking to trade this today at all, but that's the kind of setup that I'd be going for there. For the long, it's very much the same thing. I mean, I'd probably be looking for something like that, I suppose. You're not going to get quite as good a stop loss as the short, but that's the margin there that you'd be looking to take as your winnings. And the stop loss would be down at around maybe 79.60, maybe a touch higher. Yeah, no problem at all. All right, so moving on to European indices then. We've got, I mean, we'll smash out all three, I suppose. Looking at the EU 50, let's head up to the daily time frame here for a moment. We've got real choppy stuff going on currently. We've got the daily bar at the moment, which is looking quite bullish, but that is pre-European Open, so we do have to take that into consideration. That's the major high, and we have this area in here to contend with. So that's going to be the trading margin between those 2 points. I would say that on a 1 minute time frame, that's actually okay. Yeah, that's all right. We go down to the 1 minute chart here, try to find a breaker structure point for this one. Breaker structure for this trading opportunity is going to be there, easily sourced. And the long above, targeting the highs, and the stop loss about here for a 1 to 2.75. So that's not bad at all. That's a nice little trade idea. I don't know about the short availability on this one. It's a little bit problematic for us. But I think this area in here for the breaker structure, followed up by a target profit at the floor. And so the short then becomes entry, target, and stop loss for a 1 to 2.53. Stop loss is absolutely fine where it planted. So yeah, that's not too bad either. Euro 50. Then moving our way down into the DAX. DAX this morning. And we've got a nice point of liquidity there. It's just come back to retest it with its current miniature trend, let's say. 15-minute time frame clears up a lot of the noise. We can see that there's a problematic area directly above price action there. And now what we've created is a no man's land. I'm going to not worry about that so much, and I'm only going to be focusing my attention on the most recent price action. The floor is here. Breaker structure for a short is there. It's a big margin for the short. That level is the same one there, so we can clear out all of the noise, and then the next level up is that one. So that's what the margins of availability look like on the DAX today. Very strong, actually. However, we have to remember that we've been seeing a serious reduction in performance in this every single day this week. So the trading opportunity for this one would be about there for the short. And for the long, breaker structure, target profit at the highs, and a stop loss at about the 50% point for a 1 of 2.53. I think I prefer the long than the short, but please just be aware these have been significantly underperforming, so it's probably going to be prudent to keep that risk cut down. I'll download that one. And then finally we've got the UK FTSE. So we have point of liquidity number 1. Got to either have that higher or lower. I think we'll have it higher, so that'll be there. We've got a ceiling in price there. The main point of inflection down at the low is the beginning of the block, which is down here. It's where the commercial institutions changed hands. Commercial shorts turned to commercial longs. We've got some big TRFs though. Short margin's not clear. It's not got a decent path of least resistance. So the main path of least resistance is about... the main path of least resistance is between there and there. It's a high risk trade, taking the trade at 1060, 1065. There's no doubt about it. It is a high risk trade. And to be honest with you, between the DAX and the EU50, I'm probably going to avoid the UK FTSE today. I don't see the reasoning behind adding the additional risk. We do have an absolutely fantastic descending level in the UK FTSE. Now that is an example of a very well established descending level. Yeah, really nice, that one. But yeah, anyway, guys, I'm not going to do the UK FTSE. There's no point. There's no need. We've got underperforming markets. Very, very dull week. We've got 4 trading opportunities this morning in the European Open. Both sides of the market on the EU50 and the DAX. There's no point increasing the exposure for no reason. So yeah, I'm going to leave that one go. And that's about it. That is about it. So I will wrap things up there. So we've got a decent amount of European indices. We have knowledge that it's been a underperforming week this week. We've all been part of it. It's been slightly less than exciting. We hope there's going to be an improvement next week, but there are not many major economic catalysts to drive that market volume. So, as I mentioned before, don't hold your breath, but we may see a bit of an uptick as a result of commercial positioning at major points of liquidity. Yeah, and that's about it. I will send out the end of week trading report this afternoon as well. So once I clear up this US Open, it's 2:30 this afternoon, and all of the orders have gone through and then come back, I've balanced my portfolio. I will send that out so you guys can have a good review of how difficult it's been, I suppose, more than anything. And yeah, wish you all a wonderful weekend. Don't forget, guys, I will be back on at around... I say back on. I'm not really going to be away, but I'll be back in the trading room for this afternoon. And I will be providing a full written breakdown for the US Open. So all of the analysis and everything that you'll need for those will be up and ready to view it around 2 p.m. And hopefully I'll catch most of you then. But if I don't, I know Fridays can be a little bit quiet. If I don't catch you again, then have a fantastic weekend, and I look forward to catching up with you on Monday. So take care of yourselves, guys. Have a great weekend. Have a great rest of the day. And yeah, I'll see you then. Cheers.